Okay, y'all, listen. We have got to stop playing with these buy now, pay later companies if we are trying to buy a home. My lender told me the other day that she is seeing more and more people get hemmed up because they think that the buy now, pay later is not going to affect them when they're trying to buy a home. Well, listen, did y'all know people are out here financing groceries? I'm not judging because we got to do what we have to do sometimes. But if you're in the market to be a homeowner, stop it. The truth is, these short-term loans have absolutely exploded. I'm talking about over 53 million adults using them just last year, and a 37-fold increase in spending over the past few years. Y'all, it's wild out here, and it's getting wilder by the moment. So in this video, I'm breaking down everything that you need to know about buy now, pay later, and how it affects you if you're trying to qualify for a mortgage. Hey friends, welcome back to the channel. I'm Sonali Hutson, and I help self-employed Christians coordinate buying and selling simultaneously without the stress, the chaos, and the homelessness to help you upgrade your home and your lifestyle using our home ownership God's Way blueprint. And if this is your first time watching our channel, thank you so much for watching. You are absolutely welcome here. Why don't you subscribe and stay a while, because I'm gonna bring you real estate in a real way every single week. Now this week we're talking about buy now and pay later and what it actually means. So let's get into it. Now buy now, pay later, it's like credit, but it's not traditional credit. The big names that you've probably used or heard before are going to be Affirm, Klarna, Afterpay, and PayPal Pay Later, and most of them work on what's called a pay in 4 model. That's where you're going to pay 25% upfront and the rest is going to come out automatically every 2 weeks until it's paid off, usually within about 6 weeks. Now Apple had its own version too, but they shut that down back in 2024. So if you use Pay Later through Apple Pay now, did y'all know that you're actually opening an Affirm loan behind the scenes? Okay, Affirm, we see you trying to be sneaky, but we see you, okay? So what makes buy now, pay later so different from a credit card is that there's no interest if you pay on time. There's barely any application process, and an approval is going to come through most of the time instantly. Now, most of the time, they're only going to do a soft credit pull, and that's not going to hurt your score at all. So one study from the Consumer Financial Protection Bureau, say that 3 times fast, found these companies approved around 79% of all applications, including most applications from people that have low credit scores. Now, I want to be fair because for some people in some situations, buy now, pay later is a big help. Spreading out a planned, necessary purchase with 0 interest when you've already budgeted for it isn't a problem at all. The problem is what happens when that instant approval removes the pause. That's the moment where you normally stop and ask yourself, can I actually afford this right now? When that pause disappears, people end up carrying more debt than they ever intended to. 4 small payments at a time without ever feeling like they made one big decision to take on any new debt at all. Does that make sense? Have any of you ever looked at your bank account and realized that you had 3 or 4 of those little payments coming out all at one time? If you can relate to this and you looked at your bank account and was like, is that Affirm? Is that Klarna? Drop a comment below and tell me, because I know it's so easy to do. And listen, I'm not judging. I've used buy now and pay later before as well. But even when a buy now, pay later loan, and a lot of them don't show up on your credit report, guess what? Your mortgage lender can still find it. Because when you apply for a mortgage, your lender doesn't just pull your credit report. They're going to go through your bank statements line by line, usually the last 2 to 3 months. And underwriters are trained to spot recurring automatic withdrawals. So when they see a draft to Affirm or Klarna or Afterpay or PayPal later showing up every 2 weeks, they're going to know exactly what it is. And once they see it, they have to count it against your debt to income ratio. Lenders like to call this the phantom debt problem. It's a debt that's completely real, that you're actively paying off, but that's invisible to the traditional credit system. And the Consumer Financial Protection Bureau used almost that exact language. 63% of buy now, pay later users had multiple loans running at the same time, and a third had loans spread across different providers at one time. So for a lot of people, the debt isn't just hidden debt, it's hidden in pieces across 4 or 5 different apps, which means even the borrower is not always going to see the full picture of what they actually owe and what their debt actually looks like. Believe it or not, the credit reporting side of this is changing fast also. As of April of 2025, Affirm started reporting all of its payment activity, on time, late, and missed, to Experian, then to TransUnion the following month. So if you've used Affirm recently, that activity may already be sitting in your credit file. Klarna says it doesn't report to United States credit bureaus yet. Afterpay mostly reports only the the negative stuff like collections, and PayPal's reporting depends on which of their products that you've used. But friends, even if it's not on your credit report, it's still going to be on your bank statement. And your bank statements are exactly what your underwriter is going through with a fine-tooth comb. People assume that because something isn't hurting their credit score at the time, it isn't hurting their mortgage approval. But those are two completely different conversations, and I want to have those conversations. So let's talk about debt to income ratio, the number that actually determines how much home you can qualify for. Basically, what debt to income ratio does, or DTI does, to everything that you earn every month. And lenders generally want your total monthly debt, your mortgage plus everything else, to stay under 36% of your gross income, though some will stretch to 45% with strong factors elsewhere. So think of your debt to income ratio as a pie. Every monthly payment you already have takes a slice of that pie before your mortgage payment ever gets a chance. So let's make the math real for a second, okay? Let's just say you make $6,000 a month gross, and your lender wants your total debt under 40%. That means all of your debts combined, including your new mortgage, cannot exceed $2,400 a month. If you got a few $100s a month going toward buy now, pay later purchases, that can significantly reduce how much house your lender says you can comfortably afford. Now, that's something that you want to know before you start house hunting rather than or halfway through the underwriting process. Now, there is some good news. Fannie Mae and the Federal Housing Administration both allow installment debt with 10 or fewer payments remaining to be excluded from your debt to income ratio, as long as the payment doesn't exceed 5% of your gross income. And since most buy now, pay later loans wrap up in about 6 weeks, a lot of them technically qualify, but you still have to prove it with documentation.
Payments can blow past that 5% threshold anyway, which means all of them get counted. So that exclusion can genuinely help. It's just not a reason to stack up purchases right before you apply for your loan. Have you ever had a lender ask you for a letter of explanation about a bank draft? Let me know in the comments if you have, because it is a very real part of your underwriting process. Now, if you're a first-time buyer, pay close attention here. LendingTree found that 47% of buy now, pay later users paid late on at least one loan in the past year, and that number keeps climbing. And 68% of users actually admit these loans cause them to overspend. It feels harmless in the moment, but if you've been saving carefully for a down payment, a handful of easy payments on furniture, or moving expenses can quietly chip away at exactly the savings and the clean financial picture that you need right now. So if you're self-employed, this matters even more. And let me tell you why. You're already going to be looked at as a non-traditional file, okay, with different approval factors. You have to provide 2 years of tax returns, profit and loss statements, and or bank statements to prove that your income is steady when you're self-employed. And when you're using buy now, pay later, and there's activity on the top of that, that can blur those lines even further, especially if business and personal purchases start co-mingling or mixing on the same statement. So this is exactly why my Home Ownership God's Way blueprint is so important for self-employed buyers. We don't guess and we don't leave anything to chance. We get the facts straight and we make decisions with wisdom and peace, ensuring that your paperwork is pristine before the lender ever takes a look at it. And listen, if you've ever felt like the mortgage process was working against you instead of for you as a self-employed or just as a regular buyer, I made a whole video called Why Self-Employed Buyers Have a Harder Time Getting Approved for a Mortgage. And I'll link it right here on the screen because I honestly think the different perspective is really going to help you as you're purchasing your next home. And if you're selling your current home and buying the next one at the same time, this is exactly who I specialize in helping. And it absolutely applies to you too. If you use buy now, pay later for furniture, or you get excited and start buying for the new house before you've even closed on the old one or on the new one, those payments show up on your bank statements right in the middle of underwriting. Y'all, I cannot tell you how many times this has happened, and this is why I'm making this video, okay? So if your lender asks you to pay off those balances to fix your debt to income ratio, then that cash has to come from somewhere. Sometimes it's from the exact same money that you were counting on for your down payment or for your closing costs. So you've got to be really, really careful when you're using the buy now, pay later. Now, if you need help walking through your specific situation, whether you're buying, selling, or coordinating both at the same time, I want you to text me right now at 757-837-0096. Y'all, I read every single message, and I genuinely love to help you figure out where you stand before buy now, pay later becomes a bigger problem for you than it actually needs to be. So here's the bottom line. At least 90 days before you plan to apply for a mortgage, stop opening any new buy now, pay later purchases. That is the single most important step that you can take in order for you to qualify for your home. At the same time, make a list of every loan you currently have open. Make a list of who the provider is, what the balance is, what the monthly payment is, what your payoff date is, and pull your 3 credit reports for free at www.annualcreditreport.com so you know exactly what's already already showing up on your credit report before the lender finds out. And then 60 days out, get your balance paid off completely if you can. Lenders typically review your last 2 months of bank statements, so clearing balances now means there's nothing left for them to find. And this is also the time to avoid any large purchases for the new house and hand your lender the full list of what you've got up front, since transparency now is what keeps you from getting blindsided and not making it to the closing table later. Now, 30 days before applying, I want you to confirm that every account is actually closed. Check your most recent statements to make sure nothing's showing, and hold off on applying for any new credit during this window, okay? Because every hard inquiry, it can ding your score right when you need it most. I've seen people lose 10, 20 points right before they close. Let me know in the comments if you've ever tried to prep your finance like this before buying, or if this is actually helping you. So whether you're 90 days out, or if you're just starting to think about buying a home or selling a home, ask your lender directly how they handle buy now, pay later in your debt to income calculation, and ask if you need to disclose loans that aren't on your credit report. Friends, the answer is almost always yes, because mortgage applications require full disclosure, and sometimes they're going to give you a full stop. Now listen, buy now, pay later isn't evil, and it's nothing to feel ashamed about using, okay? The goal isn't to scare you away from using it if you need it. The goal is to use it at the right time, because timing can make all the difference when you're getting ready to buy a home. And if you're planning to buy in the future, listen, just go ahead and get ahead of it now instead of finding out the hard way during underwriting. And if you're selling and buying at the same time, protect your cash and the clean paperwork you'll need on both sides. And if you're self-employed, give your lender the cleanest, most consistent financial picture you possibly can. Because like I said, when you're self-employed, sometimes there's just a harder road to a qualification. Now friends, if this video helped you see something that you hadn't thought about, please hit that like button, because it helped this video and all of my content reach other buyers and sellers who need to hear the truth before they get into their mortgage process. See, every day people just like you reach out to me to figure out whether they can actually qualify for a mortgage. And y'all, I love having those conversations. So please don't hesitate to get in touch with me. You can text me at 757-837-0096. You can also just drop a comment below. I'd love to connect and understand who you are, what your goals are, and what I can do to absolutely be a blessing to you and your family with your next season. Friends, thank you so much for watching my channel. Your support absolutely means the world to me. Every single week, I strive to bring you real videos in a real way every single week, and I'll see you in the next video. God bless you.